managing partner of Deepwater Asset Management, and fast money friend Gene Munster joins us now. And Gene, you personally are amongst those legions of investors whose patience will be tested. So what are you waiting for?
Indeed. Melissa, first, I am bracing as someone who's been supportive of what Tesla's doing and optimistic about where this company can go. I was just stunned today. I think that this caught me off guard. I was expecting it basically to be flat. Deliveries is down 9%. And the first question I asked, first order of business, is how bad is it going to get? The panel's done a great job of articulating there's going to be more negativity. I just want to put that in a context, is that going into today, the street was looking for about 15% delivery growth in 2024. If you look at the numbers they just reported and assume that they can grow deliveries 10% sequentially for the rest of the year, deliveries will be down 3% for the year. So this is probably more ugly than it seems even today. And given that change and look what happened in the stock, I don't think that's fully priced in. So I think, Dan, you've been clear about that $100. I don't think we're going to see 100, but I do believe that the stock is going to go lower because this is going to be what I think is going to be kind of the kitchen sink, where you're going to see analysts, I had that job for a long time, throw in the towel and say that this is going to be over for a long time. So I want to start there. Second is the bigger picture. And I think, Tim, you were talking about just, this EV and the EV picture. Just to frame that in, that's a $2.5 trillion market. What's the auto market on a yearly basis? Eventually, of course, it's going to go EV. Panel appropriately talked about what's the timing of that. I think it's going to come faster than most people think, even though this is such an ugly day on the delivery numbers. And the reason is that I believe one of the biggest factors in this horrible number was that there was so much excitement around EVs. People who typically buy a car every 5 years probably moved it forward and bought it 3 years, pulled a lot of demand in. I think eventually that just starts. I'm guilty of being too optimistic, but I think eventually they get to the other side. And one final thought, Dan, you talked about FSD. I agree that that is an important piece here. If anybody's tried FSD, the beta that they just put out last week, it is a step function better than what they've ever done. And so I think that is going to come probably in the next year or two. And I believe that that's going to be another catalyst. So that's where I'm at.
What can they tell us, if anything, in the next quarter or two that can sort of, I don't want to say solve certain issues, but for instance, if they come out with a lower cost model, does that solve for some of the weakness that they will see in China and address that next wave of growth that investors are looking for? Is there sort of a couple of things that they can do that can make the story a little bit better?
So you've got two camps. You've got the people who believe. And the reason why the stock's not down more today is because that camp still exists. The reason why this still has the market cap it does is because that camp still exists. They're not going to be influenced probably by another couple punky quarters. That won't influence it. The people who are skeptical, there's nothing that Tesla's going to say over the next, when they report their quarter on the 23rd, that's going to get those people more optimistic. But as an investor, I think you need to fast forward to, I'm already thinking about mid-2025. And at that point, we're going to have some really easy comps. I mean, this is a down 9%. March of 2025 is we're going to start to get easier comps. I think that starts getting reflected in the stock probably mid to late this year. So that's kind of the time frame. It's going to be rocky for the next several months. I don't think there's much they can say, Melissa.
Well, it wasn't a good quarter. I want to get to Dan Ives and everything he's got to say. Of course, longtime bull on the stock. From Wedbush Securities, Managing Director of Equity Research. Dan, I'm reading your report, which you wrote very quickly. Let's call it as it is. While we were anticipating a bad quarter, this was an unmitigated disaster. First quarter deliveries was a nightmare quarter for Tesla, you wrote. Elon is now pressured by the street, and China demand remains very soft. And you also say, in this case, street criticism is warranted. But then I end, and you still have an outperform rating, and I wonder why.
Hey, look, I mean, for the long term, like in terms of the actual opportunity for EV, for full self-driving, for autonomous, that's still there. But let's just call it like it is. This is no smoke and mirror. I mean, if you looked up train wreck in the dictionary, you'd see a picture of Tesla's 1Q quarter. And, I think the big problem is deliveries. How do you reverse the trend? And that's why I believe this is a fork in the road. In other words, Musk either turns this around, whether it's cutting prices, put the strategy in place, or David, I think we sit here maybe 3-4 quarters from now, and this is actually a seminal moment and the start what could be some darker days ahead if they do not turn this around.
All right, but what does the turnaround look like? You say cutting prices. Clearly, they're facing more competition from Chinese EV makers, not just in the domestic Chinese market. So what do you do if you're Tesla?
I think you have to lay out the strategy. Okay, what are price cuts going to look like? When are the new models coming? What could software be as a percent of revenue? What's the AI roadmap? Right now, it's essentially playing darts blindfolded. You don't really have an adult in the room. The conference calls, as we've talked about here, have really been horror shows. So investors, they're hoping in terms of that, what's on the other side of this. Now, in terms of the growth, the opportunity, $30 billion in cash, they're in a phenomenal position from that perspective. But I'd say probably this is what I'd say in the last 5 years, probably the darkest period relative to what we're seeing in China. And this quarter, exclamation mark.
All right, but you talk about, the hope of investors. You still clearly have hope as well. So what do you base your hope on? You've been, in the last 2 minutes here, you've been quite negative.
Mm-hmm. It's that we're 3-4% of automobiles are EVs. Is that full self-driving autonomous? You could argue that could be $1 trillion worth of value from a software perspective. The China story, you've seen the price cuts start to stabilize. They had a good week of the last quarter. So there are some optimism, and I still believe you could be toward 2 million units for the year. But this quarter, there's just no way to sort of glass half full it. This is one where even whisper numbers called 415K. 386, a disaster.
So is it supply or demand? Because we expected some production setbacks in the first quarter, didn't we?
I think supply would be dog ate the homework. Maybe call it 30K. You could explain that in a press release. But realistically, it's demand. And I think the problem here, Sarah, is that, okay, you're either going to cut prices or ultimately, you're going to hold serve and then focus on what you could actually do, but hold margins and where volumes could go. The problem is that you can't just put one toe in the water. In other words, what's the strategy? How are you going to reverse?
And do you know how?